Colleague traders, we are back again on your screens, and it's all about Forex training on this YouTube channel, Leading Forex. Today's video is going to have a link with one of my previous videos, which has to do with support and resistance. So if you are a trader and you haven't watched that video, then I will ask you to go to the playlist, Forex Training for Beginners. That is the playlist on this channel. There are about 44 videos in that playlist, starting from part 1, part 2, up to part 44. Today's video is going to have a link with one of the videos that I talked about support and resistance. So go look for that video, watch that video, so that what we are going to do today, you'll be able to get a clear understanding. Now, today's video is going to be a continuation from our previous video where we talked about how you can actually use moving averages to identify trends, identify entry points, and also identify exit points. That was the previous video we talked about. So if you haven't watched that video, it is the video before this one. Make sure you watch it so that what we are doing today, you will also understand and understand it well. So today's video is going to be a continuation. And in today's video, we're going to look at how people or traders use moving averages as support and resistance. That is going to be our topic for today. So if you are a trader who loves support and resistance as a strategy, then this video is going to add up to that knowledge of what you already know about support and resistance. Is that okay? My name is Kofi, your admin for this channel. I wouldn't waste much of your time. This video wouldn't be too long. I'll make sure I keep it simple so that we can all understand and understand better. So today we are doing support and resistance. And what we are going to use is moving averages, whether exponential or simple moving averages. You can decide to even combine the two if you want to do that. Is that okay? So that is going to be our topic for today. So quickly, without wasting my time, let's go to the slides and look at the slides. After that, then we go to the MT4 and then we can look at what we have in terms of the practicals. All right, so we are talking about moving averages being used as support and resistance. That is going to be our topic for today. Already, if you want to get in touch with me, it's so easy to do that. My contact details are here. Telegram at Kofi Dollar. Via email, that's leadingforexgh@gmail.com. My phone number +233, then 246136609. I am in Ghana, so you need to add the country code, which is +233. Then the number can follow. Is that okay? So today, let's quickly go to what we have. Moving averages being used as support and resistance. Now, the note says that point number 1, moving averages are used as dynamic support and resistance. When price touches the moving average and bounces, it is seen as support or resistance. Point number 3 says that there are those who also plot two moving averages and only buy or sell once, or once the price bounces in the middle of the space between the two moving averages. I'll be explaining this in the practical session, so no need to worry. So you could call this area the support or the resistance zone. So what we are trying to say here is that people use moving averages, whether exponential or simple moving average. People use them as support and resistance. And how do they do that? When they plot these moving averages and then the price or the candles comes and then hits or touches those moving averages and then bounces off those moving averages, it is seen as support or resistance. Is that okay? And the point number 3 is also saying that there are those who also plot two moving averages, and then they use the intervals between the moving averages as a zone. And so whenever price comes into that zone and then bounces off that zone, they then place their trade thinking or believing that that zone is a support or a resistance zone. So this is how people trade support and resistance using moving averages. Now, let's go further with the notes because there are some few things we need to get clear before we can go to the practical session. Now, this is a typical example of what we're talking about. Now, if you look at this chart, you will see a moving average, which is a 50 EMA. That is the one that has been plotted. A 50 EMA is what is on the chart, which is the blue line. Now, this blue line, you will see how price came and then hit the blue line at the top here and then bounced off, came back to a sell. So at this moment, this bounce over here is said to be a resistance. Again, there's another bounce over here, which is also a resistance because the trend is a downtrend. So the line here becomes resistance, okay? If it was an uptrend, then the moving average will be seen as what? Support. But since the moving average, this is a downtrend and the moving average is up, that becomes resistance, all right? Like I said, if you haven't watched the support and resistance video on this channel, please go and watch it, and so that you get back and then understand things perfectly, all right? So you can see how price bounced off the moving average here again, and then you can see that again here. It bounced off the moving average and then comes back to sell. It does that over here too. So whenever you have bounce on the moving average and then the price goes back, that becomes a support or a resistance, depending on the trend of the market. If it's a downtrend like this one, then we will say this is what? A resistance. But if it is an uptrend, then we will see that as support. Is that okay? Now, let's go to another slide so that you can see how people use two moving averages. And then the space between those moving averages as what? A resistance zone or a support zone. So let's look at the next slide and then we can see that. Now, this is the next slide. On this slide, you can see how there are two moving averages on this chart, which is the 10 EMA and the 20 EMA. Now, these two moving averages, the space in between them is seen as a zone. It's seen as what? A zone. So whenever price comes to that zone and then bounces off the zone, then it is seen as what? Resistance. In this case, it is a downtrend. So it becomes resistance. So the zone here becomes a resistance. Again, we can see another bounce over here. That is also another resistance. There's also another bounce over here. That is also another resistance zone. And then in that order. So once you see a bounce off a zone, then we can say that it is a resistance. So there are people who use two moving averages and then the interval between them or the space between them is used as a zone for either support or resistance. So if this was an uptrend, then of course, this will be seen as support and not resistance. But because this is a downtrend, we are going to be seeing this as what? Resistance levels. Is that okay? So this is how people use support and resistance using moving averages. Now, we're going to go to the practical session on the MT4, and then you can see some live practical session for yourself. Now, before we do that, let me say this. Now, what I want you to take note of is this. There are people who are also giving different moving averages and then different strategies with regards to these two support and resistance style of trading using moving averages. So I will entreat you to go search on the internet or on YouTube to see if people have done back testing or those who might have done forward testing. When it comes to testing of a strategy, we have two types of testing a forex trading strategy. we have the back testing and then the front or forward testing. The forward testing is you begin to take trades with the strategy for a period of 3 months, 4 months, 6 months in order to see the outcome of the strategy. That is forward testing. Back testing is you are going to be relying on the previous prints or the previous, support and resistance zones. And then out of that, you will see where there was support. You see where there was resistance. And then you ask yourself, how many pips would you have made? Would you have made 50 pips if you had taken that trade? Would you have made 20 pips or whatsoever? Would you have lost or won that trade? When you go back to the charts, maybe the last 6 months, the last 1 year, the last 2 years, to check to see the strategy where it gave an entry for a sell or buy, then you are doing what we call back testing. But when you do forward testing, you are actually testing the strategy live. Moving forward, you are setting a target of maybe 6 months, 3 months to test the strategy and see whether it will be profitable or not. That is what we call forward testing. Is that okay? So there are people who might have done forward testing or back testing, and they will give you their winning rates. If the winning rate is above 50%, then maybe you can consider that as a strategy and also test it. But if the winning rate is below 50%, then I will advise you not to go for that strategy. Because if the winning rate is just 50%, it means you've lost 50 and won 50. It means you are still going nowhere. It means you just broke even. So there's no need to use that strategy because you are trading as a trader to make profit, not to keep standing at one place. So if the winning rate is 50%, then I will advise that you don't go for such a strategy. It means that you might have won 50 and lost 50. So it is not a good one. But when the winning rate is around 70%, 60%, 80%, then you can begin to consider that as a strategy. If it is 60%, it means you lost 40% and then you won 60%. So even if you take out the 40% from the 60%, you're going to be left with 20%. So it means overall you are growing your account by 20%. Do you understand? Yes. The same way, if the winning rate is 70%, then it means you lost 30% and won 70%. So even if you subtract your 30% loss from the 70%, you will still be left with 40%, which is going to mean that you are growing your account by 40% rate. Do you understand? Normally, when traders come across the winning rate, they don't do the proper analogy or they don't scrutinize that percentage very well. Once they see 50%, it means that they are going to be winning 50%. No, 50% win rate means you've lost 50% and you won 50. If the strategy is just 30% win rate, it means you've lost 70% and won just 30%. That will not be a good strategy to consider. But oftentimes people think that when it is 30% win rate, it means that the account is going to be growing by 30%. That is not true. I have come to realize that that is the reality. If you are winning 30% or 20%, it means that the winning rate is not good. The winning rate must be 70%, 50s and above. It must be 50 and above. Then you can calculate and make profit. If your winning rate is 80%, it means you've only lost 40%. So 20%, because your winning rate is 80. It means you've only lost 20% and won 80% of your trades. If that is the case, if you subtract your 20% loss, if you subtract your 20% loss from the 80%, you will be left with 60%. So it means that overall, you'll be growing your account by 60%. Do you get it? So whenever you come across a strategy and they give you the winning rates, do your calculations well. I don't know if what I'm saying is clear. Make sure you do your calculations well. If not, you begin to apply that strategy on your live account and you will not see what the one saying is actually or actually gave out. You will not be seeing that results. So when you go through other people's strategies, make sure you are looking for a strategy that has a winning rate that is above 50%. A winning rate that is above 50%. Is that okay? Good. Now, let me continue, and then we can look at the practical session on the MT4. So let's go straight to the MT4 now. And then this is our MT4. Let's plot 2 moving averages, or maybe 1. Let's go by the same moving averages we used in our previous video. If you remember, we used the 50 and then the 20 in our previous video. So let's go look for moving average, which is under trends. So you go to trends, moving averages here. Let's use 50. 50. And then let's give it a blue color. So that one is simple moving average. Okay, so this is our simple moving average. All right. So with this, if I go to the weekly, this is on the weekly time frame. All right. If I go to the weekly time frame, let's see, you see a bounce here. A good bounce over here. Should we say this is also a bounce, or this is also a bounce? That would depend on what you think. But in all, I've seen a good bounce here. I've also seen another good bounce here. There's also a good bounce over here. Another good bounce here. Do you see that? So this one becomes resistance, and this one here becomes support. Do you see that? So this is support, this is resistance, this is resistance, this is resistance. I would advise that if you want to do this, maybe do it on the higher time frames. But if you want to do it on the smaller time frames too, that is fine. That would depend on which one works better. Because personally, I am just using this moving average off head. Okay, I'm just using the 50 off head. All right. So you would have to decide whether you want to do this on the smaller time frames or on the bigger time frame. But this is a typical example of what we talk about as support and resistance. If you want to be using moving averages, is that okay? Now, again, let's see. If you move to, this is weekly time frame. Let's go to daily and see if we can spot some support levels. You see that on the daily, we are not seeing that much. We are not seeing that much on the daily. See, maybe only here. I don't know, maybe only here, or maybe here. All right. But on the daily, you see that it is not that good on the daily. All right, let's go to the 4 hour and see. Yes, on the 4 hour, you can see some nice ones here. This is a nice support over here. Another one over here. All right. Now over here, there might be a bit of confusion. So I don't know what will be your decision, but at least we've spotted 2 nice ones. This is a support here. This is also a support here on the 4 hour. So I don't know what time frame will be best for you. Let's go to the 1 hour and see. On the 1 hour, maybe yes, this is a support over here on the 1 hour. There's also another support over here on the 1 hour. So you understand, you may have to look at the time frames, maybe 15 minutes. Let me look at 15 minutes. 15 minutes, I'm not really seeing something nice. All right. Like I said, it would be good to use it on the higher time frame. So you see that on the 4 hour, you are seeing something nice. On the 4 hour, you are seeing something nice on the 4 hour. Also on the weekly, you are seeing something nice on the weekly. On the weekly, here is it. You're seeing something nice on the weekly time frame as resistance, 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 support. All right. So that is how you can use just a single moving average for support and resistance. Now, let's bring the 20. let's put 2 and see if we can get a zone. The 20, let's name it, let's give it a color of red like we did previously. Sorry, that one's supposed to be exponential. So exponential. This is exponential. So this is weekly, all right? So if this is weekly, this is a zone. Over here is a zone. So whenever you get a bounce in that zone, like here, you got a bounce in the zone. So this will be a nice trade to take because there's a bounce in that zone. All right. So you see it, there is a nice bounce as support in the zone. Also, there was a nice bounce here in the zone. So this will also be another resistance. Here, yes, maybe there's a bounce and then maybe here. So you see, it's either you use it as a zone or you use a single one. So look at it, this on the 4-hour. So on the 4-hour, this is a zone. And then the space in between the two is a zone. So there is a nice support over here, another nice one over here. You understand? So this is how you can either use the support and resistance by using zones or using just a single one. Okay. So it's really something for you to decide. It's really something for you to decide whether you want to use the zones or you want to use just a single moving average. Is that okay? Now, this is the whole strategy. Like I said, this video is not going to be a long video. It's going to be a simple one. So you would have to decide how you want to use it. Try different moving averages. You can try 15, 8, 9, 20, 21, 25, 30, 40, 50, 60, 70. Just think of the numbers. 100, 200, and the rest. You can think about that and then decide which one will work best. Or you can go on the internet and search those having good setup, those who might have taken the pain to do all that for you. So you take DS and then experiment to see if you'll be able to get a good outcome out of it. All right. So this is how you can use moving averages for or as support and resistance. I'll leave the rest for you to go and then search to see if you get something good. Once you get something good, it becomes yours. Now, listen, let me say this to end this video. Forex trading is so difficult to do. It's not an easy thing. If it was that easy, everybody will be trading Forex because it is something you can easily do with your phone or your PC or your laptop. So if it was easy to trade, if there was a holy grail somewhere that can be used to milk all the monies in the Forex market, like everyone will be doing it. So have this at the back of your mind. And then please take note that if you really want to learn this, then you need to take your time and test a whole lot of setups to see which one will be a bit good. It is not going to be the best. It is not going to say that it will always give you wins without losses, but your wins will always be better or more than your losses. Once you find something that can give you more wins than losses, then you have found something good. Is that okay? Now, don't attach emotions in trading because that is what the banks, they want you to feel. They always want you to feel bad when it comes to emotions. They know that you are a trader and emotionally, once the trade is going against you, you cannot withstand it. And so based on that, they will want you to take decisions. And once you take some decisions by closing your loss trades, then that loss you've incurred becomes a profit for the banks. So you always need to control your emotions when you are trading the Forex market. And this is how I control my emotions. I always tell myself that whatever money I am depositing in my Forex account, I assume that that money is already lost. That is what I do. I assume that this money I have deposited in my Forex account is a lost money. It's something that I don't have. So I am looking at how best I can minimize my loss, go with a moderate lot size, and then make profit out of it. Okay? If you are afraid of losses, then you can never win in this game called Forex. You need to be ready for the losses. Once a while, the losses will come. And when they come, you accept it in good faith. The very way the winning came and then you accepted it in good faith. The same way when the losses also come, you should accept it in good faith. Don't be thinking and then be thinking, it will surely come back. It will surely come back in my favor. What if it doesn't come back? All right? Even if it will come back, how many months do you think it may take to come back? So accept losses when they come and accept the wins also when they come. But make sure your wins are always better or more than your losses. That is how the Forex market is. If you don't have this as a concept, or if you don't have this at the back of your mind, then Forex trading is not for you. I have been doing this since 2017. So you can calculate the number of years. But I don't want to come out on the internet and brag that, okay, this is it, because I equally make losses. The very way I make wins, I make losses too. You understand? So don't think that the Forex market is always a win-win thing. And all you are looking for is something that will give you win always. No, you may not get such a thing. Is that okay? So look for something that will give you the wins more than the losses. That would be the right way to go. My name is Kofi, your admin for this channel. I will see you in our next video. All right? Until then, take care and stay blessed.